Right, what's up everyone? So today we're going to be covering the nice 1 to 2.87 risk reward short. We ended up taking on gold last night during Asia. So these are two factors that we don't normally kind of dabble in, gold and Asia, but we thought we'd give it a try. A friend of ours was getting a nice hit rate with more or less using the same concepts. So we thought we'd give it a try and ended up getting a nice clean banger trade. Ended up doing 16 points down all the way down on gold, and again a nice 1 to 2.87 risk to reward. So the whole preface behind this trade was that we had a ton of engineered liquidity, or which was unmitigated buy stops, kind of on this trendline liquidity here, all the way from London low, all the way building up to New York, and all the way through to CME Open, which was after New York close and an hour before Asia opened. So you can see that essentially price was just bouncing off this trend line. Obviously we don't trade trend lines, but obviously there was a series of engineered buy stops building up all below this level as low resistance liquidity. And so more or less that was our clear draw. For us, obviously, as it was Asia, which is typically much more liquid, we weren't going to be aiming obviously for the whole leg down. But what stood out to us was this clear New York low. Just at the bottom of this wick here, but obviously we'll be getting into that later. So what did we see? So basically if we go on the 5 minute, right, so as we can see, CME opened here, which was at 11 o'clock, and basically what ended up happening was this was a 5 minute and a 15-minute inverse, which was great as it kind of lent into our bias of, right, well, at some point we're going to want to take out some of this engineered liquidity. So we got 5 minute and a 15-minute inverse. Ended up coming back here. This is all through CME, by the way. But then basically what happened is, as Asia markets opened, we ended up souping the CME high and retesting what was this 1 minute bearish gap at the high. So basically a soup is essentially a sweep of a key high, failure to candle body close above it, and basically can be used in confluence with your directional bias for your trade. So for us, again, that was more reason to go short, as we ended up souping Asia's high into the 1 minute bearish gap and failing to close above it. Great. So then what else did we see? Yeah, perfect. So then we came in, as you can see, there was the 5 minute soup into the 1 minute bearish gap, which was, sorry, no, if I'm right, 2 minute gap, sorry, right, 2 minute bearish gap. Came in now to Asia market, ended up getting a straight slam inversion straight through this 1 minute gap, which for us was great confluence due to the momentum of the V-shaped reversal. So we ended up entering on this candle here, which was more or less betting on the continued momentum now to take out this engineered buy stops. And again, we ended up inversing this 1 minute as well, which was great. And yeah, so we entered here, went break even at this wick here, which was the low from CME between CME and Asia. And basically the whole preface behind this trade was as well that we wanted to go for this this wick here, which was New York's low. But the thing is, because we've never really traded Asia before, and due to Asia's illiquid nature, the delivery was really slow, and we've never traded gold before. So really and truly, we got to this low here and we saw that like momentum was really like lacking. We were seeing like wicks in either direction. So more or less we ended up closing, I believe it was on this this wick down here. Sorry, no, it was this candle body down here. We ended up dragging our stop last minute because more or less we were up. The risk to reward was nice. It was a nice move captured. We thought, well, you know what, is it worth risking X amount of profit here to then lose this, which obviously we reversed but ended up going lower, but obviously who knows. Yeah, so we ended up just moving our stops to this to the bottom of this candle body here, more or less in this high volume area, and ended up just getting tagged out. Really nice trade at the end of the day, 1 to 2.87 risk to reward. Ended up taking out a nice amount of this low resistance liquidity. And yeah, for a first time trading gold and first time trading Asia, definitely not too bad. Oh, and also one last thing was we ended up having this high time frame PDRA, which was an hourly gap, which price had basically been respecting. This was the gap from the start of the week. Yeah, so as you can see here, bearish retest, bearish retest, bearish retest, and we just kept wicking through it, failing to invert it. So obviously as we came up again, it was just more reason to kind of run some of this engineered buy side liquidity down here. Just going over this again, reasons for taking the short. We had a delivery into a high time frame PDRA. This is hourly gap. with failure to invert it. Nice. We had a 5 and 15 minute inversion. We souped CME high. And what else do we have? So, sorry, clear draws below as unmitigated buy side LRL, and a bearish retest of a gap confirming shift in momentum. Right, so again, this was more or less the preface behind the trade. We delivered into an hourly PD array, failure to invert it, a 5 and a 15 minute inversion, which was great, which we also then saw the 2 minute bearish retest out of. We souped CME high, which was great, failure to displace above it, and more or less it played into our whole bias of, well, at some point we need to take out some of this engineered buy side liquidity below. And yep, as we saw so many clear draws below that price wanted to draw towards. Right, so that was the end of the episode. We hope you enjoyed it. Just a quick breakdown here of the trade we took last night. Again, we don't normally trade gold or Asia, but we wanted to try it as this was more eval plays, especially due to the seasonality of December. It was nice to get some reps in during sessions we don't normally trade, just on some evals. But yeah, again, YouTube doesn't let us put the link to our free Telegram in the description. If you want to join, just comment join and we'll send you the link. But yeah, hope you enjoyed. See you in the next episode, and remember to be careful trading due to December seasonality. Delivery will be much slower, meaning easier manipulation, and yeah, overall lower targets. And yeah, just be careful, and see you in the next episode.